Good morning, traders, and welcome to premarketinfo.com, where we prepare you for all the short squeezes that drive this market up for 2 days and possibly follow it through today. Just wanted to say our thoughts and prayers go out to Joel and to his family today and the loss of Joel's father-in-law. Thoughts and prayers will be with Joel and his wife Lisa today. On today's show, short squeeze may continue to drive this market higher. Stocks breaking out across the board, many approaching 52-week highs, and merger Monday. Bristol Myers buying Amelin and Lind AG buying LNCR. Lots of action here today. Lots of action. This morning we've got a couple of mergers to talk to you about, but first I just want to talk about this crazy move that we've had in the market over the past 2 days. Obviously the S&P rallying over 33 points on Friday, not giving anything back here yet. We've had an overnight range as low as 1352.50. We've been as high as 1362.25. We're up a couple of points right now, trading at 1358.75. So the market is holding pretty strong here onto its gains. We've got Apple Computer, which is trading up just slightly, actually trading flat right now, up 25 cents as you can see here. But man, what a move Apple had on Friday, up over 15 points, actually almost 15 points, $14.95 to be exact. Stock is breaking out of this 570 doldrums that we have been talking about forever on the show. If you check out the chart here, 590 is a critical number for this. I'll just highlight it here on the chart. This is the 590 area. Critical for the stock. I think it may test it here. Joel also thinks so in the next couple of days, possibly even as early as today. I think that's where it wants to head. If it can break out over 590, there's not much until the 600 psychological level, and above that there's another high back here at 606, which was back on April the 25th. So if the stock can get above this 590 resistance area, it could be off to the races. Another stock to highlight here, Google, G-O-O-G. That stock had a huge day on Friday as well. Let's just check out the daily chart just to show you the action from Friday. What a move. I mean, this stock bottomed here if we go back when this whole rally started around 2 o'clock on Thursday afternoon on the rumors of the cancellation of that meeting, and obviously the market just taking off after that. But Google got down as low as 557. It is now trading at 580, so 23 points straight up. We've caught a lot of people short in this issue here as well. It is trading down a buck this morning, but holding up not bad considering what a run it has had. Is some resistance here in this 5 area. It just looks thick on the charts. So until it can start to get above this high here that we set back, I'll just grab you the high on June the 19th, 584.28. If it can get above there, you got a couple other little highs, but maybe it could eventually try to make a run for the 600 as well. Always keep an eye on Apple when you are trading Google because they do tend to track together. So if you are trading Apple or Google, you want to watch those two stocks as they do sometimes move in sympathy together. IBM this morning is trading just actually flat here. 195.58 is where it closed, but it had a great move too. 2-day run on all these stocks has just been incredible. 189 is where we were trading at just the 2 days ago, now up at 195.58, and the market continuing to run. It was strong into the close. I kind of speculated, I wrote a piece at 1 o'clock on Friday, 1 p.m. that is, that the market might be strong going into the end of the quarter. So we were up about 25 points when I wrote that piece, and I was speculating that the market might close strong just because you have the end of the quarter. So portfolio managers send out their statements to their clients at the end of the quarter. They like these, obviously, statements to look as good as they can, and when you have an opportunity for the market to be up 25 points, they probably press the buyers up into the close, and that's exactly what we did see as we had lots of buy imbalances come into the close in the last 15 minutes, pressing all of these stocks higher, many of the stocks closing near or at their highs of the day. IBM was no exception, closing right near its high of the day at 195.58. And the stock is trading flat, but we've got a lot of air here. This was what Joel was highlighting on his weekly comments. There's a lot of air up to the 200 area. We always talk about when stocks break down quickly, they can move up just as quickly. And we had this breakdown day back on June 21st where the stock was at 199.45. It had consolidated for a few days just under 200, significant high frequency resistance up there as they leaned on this huge institutional seller, which was at 200 on the button. So the high frequency traders sell right in front of him at the 199. Well, actually on June 19th they sold right at 199.99. But in the high 199s, the high frequency traders are selling just as they lean on this 200 area. So then the stock broke down. Well, now it is kind of breaking out and getting back up into this area where there isn't a lot of reference points. So it could move up quickly. So don't be shocked if you see an IBM if the market goes to rally, tack on another couple of points in a hurry. Gets up to this 200 area, definitely could run into some trouble. But until it gets to there, we do have some air. Now you got to keep in mind though, we have had a heck of a run here in 2 days, so don't be surprised the market could get back and start to fall off too. I think it's critical, as Joel was highlighting as well, that this market hold on to its settlement prices on all of these stocks and the overall index. If we start to break down early, you might see some sellers come in just to take profits. So you want to be careful. Right now you have this big fight. It's between the shorts and it's between well, for the most part, it's a short squeeze where you've got a lot of the shorts actually covering. I think the last 2 days has been driven for the majority because the volume hasn't been super high. The majority of the buying pressure has been from shorts who are getting squeezed from being short just on Thursday morning. If you look back to Thursday morning, we had a lot of bad news. So a lot of traders were thinking, oh, the index is going to actually finally maybe break through this 1300 area, added to their short positions. They were dead wrong, and obviously the market took off, and there hasn't really been much of a pullback. So most of these shorts, if they were trying to buy pullbacks, they haven't had much of a chance, especially since we gapped up overnight on Friday morning. So considering all that, I think you've still got a lot of shorts that are holding on to the positions, hoping that this can hold on, that the market won't continue its rally, that it might struggle to get through this 1360 resistance area. But if it starts to break through, eventually most of these shorts are going to throw in the towel, and you're going to actually start to see real buyers starting to come in as well. So I think on pullbacks, I think you will find buying pressure from those shorts who are still short, and you'll also find buying pressure from new buyers who are coming into the market and looking for some value coming in as well. Lots of stocks have been breaking out to new 52-week highs. General Electric is one of them. What a move it had on Friday. $20.84 is where it closed at, trading down just 4 cents, so holding up not bad considering the heck of a move that it did have on Friday. This whole $20 area will now be massive support for the stock. If it can get back down into this area, I think you will find buyers. Even look to on Thursday's high, which was $20.19. Gets anywhere back, I don't think it's going to pull back that far today, but if it was, if we were to go into a sell-off mode, I think you'd find great support here in the mid-20s to low 20s. Other stocks that have been moving, obviously, AT&T has been one. We've talked about this on the show, just being so strong here for so long. This stock, even when the market was breaking down, this stock still wanted to make new 52-week highs. The relative strength has been great on AT&T. It had run into trouble here in the 36 area. Same story as IBM. There was a huge institutional seller at 36. The high-frequency traders like to sniff out those sellers, and they like to lean on those sellers because it limits their risk. High-frequency traders have very low profit margins, so they like to lean on other orders in order to control their risk. So many of them selling in the high 35s here. Stock peeled back, just trading under 35, consolidated for a couple of days just around the 35 area, and has now started to break out again. Probably going to retest that 36 area maybe as early as today. I would expect high frequency resistance in the 35.90s once again until this 36 level is taken out. When the 36 level, if it is taken out, then those high frequency traders will be out and they will cover. So you want to be careful if you're trading AT&T today. Just be cognizant that there will be some high frequency resistance early in the 35.90s. Johnson and Johnson, same story here. This stock has been absolutely taking off over the course of the last month. Kind of has a mind of its own, and we broke out over this key 67 level just a couple of days ago. The stock had an inside day where it peeled back a little bit on Thursday, couldn't quite get above the 67 area, but now obviously with the big run up on Friday has broken out over the 67 area. Any pullback to 67, I think you will find some buyers if you play with that theory that old resistance becomes new support. So keep an eye on that 67 level in Johnson & Johnson. If it starts to break out over the 67.56 closing price, you'll have more resistance at 67.75, just a little bit, and then up in the 68 area, you'll have probably another institutional. They seem to sell this every point, and there's always institutional selling pressure on the handle. So it wouldn't surprise me if you've seen another major seller at 68, and it also wouldn't surprise me if you see high frequency resistance in the 67.90s. So that's where the stock will probably run into the most trouble, is in the 67.90s once again. As the same story as the AT&T, those high frequency traders lean on that seller at 68. Procter & Gamble, here's a stock that couldn't do anything right until I'm going to bring you up a 5-day chart on this. Just bear with me while I bring it up. So here we go. 5-day chart on this. If you check out this action here on Tuesday night, it closed at 59.27. RBC Capital downgraded it overnight. Stock basically bottomed that day right off the open of 59. I think it got down to as low as 59.27. Straight up since then. Got to the 60, tried to test, pulled back a bit, came back up to the 60, and now has broken out. So RBC Capital, the terrible call downgrading the stock. They're already 2 points underwater. The stock is taking off. I wouldn't expect much resistance until the 62 area, which is the next whole number. And as you can see on the chart, there was some old support at 62. So it could be a little bit of resistance in that 62 area. It's always key. I play this whole number theory where you often have major traders or institutions that throw out large orders at whole numbers just because it's simple. They'll say, sell me 50,000 at 62, sell me another 50,000 at 63, sell me another 50,000 at 64, and they scale their orders. Now, usually when stocks are making 52-week highs, you see this a little bit more because those orders may have been out there for a long time. But as stocks come back to these levels, that's what they sometimes do. And high-frequency traders love to lean on those orders, so expect that if it does get into the 62 area and if there is some institutional selling pressure, the high-frequency traders will find that, and they'll probably be selling the 61.90s. So wouldn't surprise me if the stock made a run for there today, but ran into trouble just under 62. ExxonMobil and Chevron, I want to talk about those two because these oil stocks have absolutely been on fire. 85.57 is where it closed, but this has been really a 4 or 5 day run since early in last week, and I'll bring up the 5-day chart for you. $80 is where this thing got onto, just under 80, and has been straight up ever since. So anybody that thought when this thing broke under 80 by that 10-15 cents and tried to short is seriously underwater. We have not had much of a pullback whatsoever, all the way up to 83.5. We did pull back to 82, kind of made a double bottom here in the 82 area, and now have skyrocketed again. Struggled a bit at 85, but have broken through that level again. This stock has so much momentum, it would not surprise me if it tried to make a run for the 52-week high, which is 87.94, I believe it is. I can't see it on the chart. But say this whole $88 area, you're talking about $2.50 away from here. Stock could see that this week if it continues its monster run. I think it will run into trouble up here in this area. If I just highlight that on the chart there for you, and that area is $88. So I think it will run into trouble if it gets up into the 87.90s. Chevron, same story. Stock has been just running here for the last 4 or 5 days. Traded under 100, kind of took out this little key support area, but then just straight up ever since then. I think you caught some people shorting the stock through this breakdown. They haven't had a chance to cover either, and the stock has just been taking off for 4 or 5 days here. Incredible strength in this market. But if we go back to early May, we had a high of 108.79 on May the 1st. Then if you go back to April the 2nd, we had a high at the exact same price, 108.79. So you got a double top up here. So if this stock continues its run, I don't think it's going to get there today, but this week if the market continues to rally, it could test up in that area, that 108.79 area that I just highlighted. I think that would be your first area of major resistance because there is a double top up there at 108.79. We do have stocks in the news here today too. Amylin, AMLN, is getting acquired by Bristol Myers, and the stock is trading up significantly here in the pre-market at $30.77. This is a cash deal, stock being acquired for 31 bucks. So Amylin will probably now, and this is what happens when they just go for cash like this, the volatility will get very, very tight. It'll trade in this $30.77, $30.78, and just slowly drift up over the course of the time until the merger is complete. So don't expect too much to happen in Amylin. It's going to open around that $30.77 area and probably just hang out there all day. Bristol Myers, though, could have some additional volatility just because it is the acquirer. There hasn't been really too much trades here today, only traded 400 shares, a smaller acquisition for them, but the stock has had quite the move up since they had a little bit of bad news from the FDA. I think it was early last week. The stock has pretty much been straight up since then. If you look at the 52-week, I think it's a 52-week high, 35.38. We had a couple of closes just below that area. If it goes into for a run, maybe that's your first stopping point. But when stocks are in the news, sometimes fundamentals can take precedence over technicals. One other small one for you too. LNCR is going to be acquired by Lind AG, which is a European company. LNCR trading up here over 7 points at $41.14. This is a stock, this was rumored already, obviously, that's why the stock had been taking off. But they're getting an extra $7 here again, so the merger price being $41.50. Same story here. The stock is probably just going to trade just under that 41.50 price, and over the course of the next month or so, slowly drift up to that 41.50 price. So, not much of a story to say on this one, other than that's going to open up about $7 and kind of hang out there all day. Best Buy has been in the news here quite a bit lately, well, rumored in the news anyways, that the founder, Richard Schultz, has been talking about taking the company private. It is trading up again here, more rumors about the same thing today, trading at 21.5. So Schultz not happy that his stock has not performed well and has decided the market isn't for him, or at least it's rumored that he's decided that the market isn't for him, and he is still discussing taking this company private. So you want to be careful whenever you're trading stocks like this with rumors out there. You never know what happens. So fundamentals, like we said, when they're in the news, always take precedence over technicals. So, but technically speaking, if you do want to trade it technically, this 22 area did have a lot of consolidation back in April and May. And so if it's just trading purely on the technicals, it could run into some trouble here in this 22 area. Really, that's all we've really got here for movers here today. The market is just kind of hanging on to its overall gains. We're down a half a point here. So I'd really like to see, and Joel was saying the same thing when I spoke to him on the weekend, that it's important that this market does hold on to these gains. We don't want to see it start rolling over early because then you could see some profit taking come in. So you have this battle between the shorts and people who are sitting on profits now that could take those profits and they could give you some selling pressure. But if the short squeeze continues here and if real buyers start to come into the market and we start to take out this 1362.25 high, don't be surprised if this thing starts to run up again, because I think we still have a lot of shorts that are short and are being squeezed. Once again, I'm Dennis Dick, and that's the Pre-Market Info Show, and we'll be back with you guys tomorrow.